Welcome YouTube squad to another YouTube video. Now today we got another case study for you. This is a bit one of our larger trades. I think it was a 1 to 25 plus risk to reward. Again, you're going to see the screenshots of the entry. Just showing that we've entered this trade, and yeah, we're going to go over obviously how we got into the trade, how we managed the trade, reasons for holding a bit longer term, and yeah, just the usual value drops. Hope you're enjoying the video so far. If you are, by all means, smash the like button, make sure you're subscribed, and follow on for more future content. But I appreciate all the support so far. It does mean the world. And though obviously we're not a massive channel, or maybe you will never become a massive channel, but at the end of the day, what matters is the value that we're able to provide to you and the messages I do receive from fellow subscribers and people who take in our content, of the change that they've seen in their trading and the consistency that they've formed. That's what makes it all worth it. So at the end of the day, we will continue to drop value. And at the end of the day, to be honest with you, for me, I enjoy just dropping value and creating content to a degree. Some part of it is stressful because sometimes I run out of ideas, but we've got some ideas flowing today. So let's get on to the charts here. So we're looking at EURUSD, and we're looking at a long from the 14th of February, the 14th and I believe the 15th. So we've got two trades here, both in the same direction. So it's going to be a good observation of how you can have a longer term plan, a longer term vision, and how you can sort of capitalize on smaller moves within that as well. So let's start off then. Structurally, as we can see here, we've done breakdowns in this area, on the way down. So you understood, basically you kind of followed along of how price has gotten to this point as well from the videos so far. And hopefully it will actually give you a good insight to why trading one pair can be very, very powerful, because you're following one set of movements. And therefore, you could be short 1 week or short 1 day and then be long the next, because you are following along the price movements, understanding the structure, understanding the liquidity. And it becomes much easier when you're focused on just one specific set of movements, rather than say, trying to follow along 4 or 5 different pairs. So that could be a little pro tip for you that you could take on board. But taking a look at structure here, so we can go to the higher time frame, to be fair, to begin with. Daily wise, you can see we had this strong impulse. Now we did wick above the previous high, so I can imagine that a lot of people would be assuming breaker structure and be assuming that we're going to make a new high. And though that is completely possible, right, it is possible, anything's possible in the game of probabilities, I believe personally that it was more to entice buyers into the market, because we never got really a strong close above this area. And though I do use, especially on lower time frames such as the minute and the maybe 5 minutes, a wick over the structure can confirm a breaker structure. But in this case, it being a strong daily high and a weekly high and a 4-hour high, I would want a strong close above, even if it's on the hourly, which we can drop down to. The hourly closes above completely collapses thereafter and doesn't even respect structure. So me personally, I wouldn't be expecting price to break that high. However, I will be expecting price, or was expecting price, to entice that idea, entice the idea of breaking that high. And therefore we had, as you can see here, a very strong 4-hour POI, where we had a very strong and impulsive, explosive, if you will, move to the upside from. And therefore I had that marked out, like so. Had that marked out as a bullish POI of where we could expect to see price move from. Now what I did was, in this case, because as you can see the POI is quite large, it's roughly 37 pips in total, and therefore trying to enter off that would lead to quite a large stop loss and would lead to not much of a risk to reward, and would need probably price to break the high to give us the sort of risk to reward model that we're looking for. So it wasn't ideal in that case. So I actually investigated that POI further. And as you can see here on the 1 hour, it's pretty much the same, it's pretty balanced out. So then we go down to the 15-minute, and again, this is where we begin to see where we can actually refine the POI. So if we refine that down, we can actually see the 15-minute here is a very nice area. And we'll actually reduce that down just a bit more. From the 5-minute, it only reduces ever so slightly, but really the entry that we got, and again you're going to see the screenshot from the entry, was from the 1 minute. So we're going to just drop down here. I got to do a lot of scrolling, unfortunately. And here we can see. Now the reason for, I don't usually do this when it comes to the 1 minute side of things. I'll wait for confirmation. But the reason for this was because when I went down to the 1 minute, we could see we had that voided area, so that imbalance that needed to be filled, as well as sort of relative lows, sitting just below. So if I just mark those out for you, a bit of liquidity sitting just above the order block that we would look to enter from. Now, bearing in mind this sits inside the 4 hour order block, so the higher time frame. This then has a lower time frame order block, so this sits within the 15, within the 5, so 2 more there. And then when we go to the 1 minute, we can see that this is where the void and sort of the first sense of the bullish nature before we exploded to the upside. And then we have a little bit of liquidity just sitting above that order block as well. So a nice stack of confluences all there. And plus, actually, just to add on to that, this order block sits at the round psychological number 1.12800. So it's just an added confluence there as well that I just literally noticed now. Now, let's just jump up a time frame now. As you can see, price did react from that area and had a limit on that area in this particular. And it's not something I usually do. As you've seen from previous case study videos, we usually want the confirmation based entry. The reason I entered with a limit we'll go over in a moment for that particular trade. But at this point, as you can see, if we just zoom out here, let's go back to a 1 hour. We've taken a lot of liquidity to the downside, right? We've taken all these lows, all these lows, all these lows, and now we've left a lot of liquidity to the upside, right? We've left trendline liquidity as we come back down lower. We've left relative highs, session highs. So, large reasoning. We'll draw some of it out just to make sure that it's, very visible. We've got our trendline liquidity across here. We have our relative highs here. So we've got relative equal highs there. We've got equal highs, not even relative. We've got equal highs here. So you can see a nice build-up of liquidity and good reasoning as to how price is going to push in that direction. You remember what I said on the previous video? Liquidity is the fuel for the market, which will fuel the movements. And this obviously being structure, this whole trade confluence comes from the structure from the higher time frame, the 4 hour POI that we're using. And that trade idea of enticing those buyers who are going to expect price to break that higher time frame high, is another big reason as to why we're looking at this particular trade. As we come lower though, let's take a look at the price action. You can see that price, this is the New York session here, it's come down, taking the previous session low and taking the equal lows that were left as well. And then we had this buildup of liquidity, right? Buildup of liquidity right here. Price, and this sits above our POI. Bearing in mind, this is probably just tapped the 4 hour. Price comes down, and I set a limit around New York time. Now, I'll be honest with you, I actually thought the limit would get tapped the next day, coming into London Open. However, I don't know what happened on this particular day, but price actually came down at roughly 7 p.m. UK time, so literally coming towards the end of the trading day and the end of New York, and tapped us in. Now, most people aren't trading at this time, which is completely fair enough, and I don't trade at this time, but it just so happened my limit got tapped. And as you can see, I give the right breathing room. I could have entered, tried to be very, very aggressive and have my entry literally on the order block and stop loss just below. But as you can see here, I give plenty of breathing room on top, so over half a pip in this case, and on the bottom as well, give plenty of breathing room to allow for spread, allow for the volatility, and to make sure I get into a trade. I'm not trying to be aggressive. I'm not trying to, purposely get a small stop loss. I'm following what the market is giving us. Now, in this case, as you can see, price tagged us in. Now, I took majority of the volume on this trade actually a bit higher up because of the higher time frame narrative. Notice from majority of the videos we've gone over so far, we've taken a lot of volume off at 1 to 4, 5, 7, realistic numbers, and they're still quite high risk rewards, of course. And that's what I like about this system and the style of trading that we use. But they're realistic numbers. Now, this one is realistic to achieve a higher number. Why? Because it's coming from a 4 hour point of interest, a higher time frame, and therefore makes sense as to why it can achieve a higher risk to reward. Now, I've already marked out where we took majority of the volume off at, and majority being 80%. once again. So at this case, let's just get it as accurate as possible there, just there. So we achieved just over a 1 to 28 on this particular trade, so meaning 28% on a single trade. Now, as you can see, this one was a bit more, it's not a scalp, so it didn't, it didn't happen in minutes, which is absolutely fine, and I wouldn't expect such a high risk reward to take minutes, for example. This one took just over, within 24 hours, it took about 20 hours, so it's still quite fast in terms of obviously, the time it took and the reward that was given. And the reason why our target was there and our take profit was there, simply liquidity, right? At this point, this is where all the liquidity is being taken, all the session highs, the trendline liquidity, the equal highs, all being taken to this point. And we're beginning to reach our first sort of key level, if you will, or support resistance level as well, where we could expect to see choppier price action come in. And if we just zoom up to the higher time frame here, you can see we're going to approach a 4-hour POI, that impulse to the downside, and where we could see a slowdown and potential. As I said, most will be looking to hold longer term to break the high. That would be our first barrier in the way of that happening, and therefore we want to be securing our profits before that happens. So that was a phenomenal trade. Trade entry wise, as you can see, it tagged us in beautifully and moved away straight away, and I was able to move break even before the market closed, because that's always a risk as well, obviously the higher spreads and gaps that market closed. So luckily price moved away quite a lot before market close, so that was good. I was able to move break even in that case. Now, funny enough, that we have, and this is something that I am adopting a bit more. As you've probably seen from my Instagram and when I post my trades, a lot of them are scalps, and I do predominantly scalp, and I have done for many years now. However, I have started to adapt more of a day trading and slightly swing approach, because I'm trying to take the edge off the day-to-day trading. I have a family, and obviously I do mentorship as well, so that takes up a bit of time. And sometimes the edge of trading and wanting to scalp and be in the market is there, but when you have trades such as this giving you a high risk to reward and plays out over a bit more time, that edge is taken away, because that, say, 28% could be, or it is a monthly target. It's a monthly amount that is absolutely phenomenal. Again, if we take the example of just a funded account of £100,000 or dollars, 28% is 28,000 in the space of 20 hours, without being risky. So not trying to over risk or put the whole account on the line to try and achieve that sort of figure. We're actually risking 1%, so a small portion of proper risk management. We're using confluences of a higher time frame. We're then using lower time frame just for the entry, and we're managing the trade accordingly. We're being realistic with our take profit. We're not making the mistake of thinking that we're going to take the high. We're taking the first instant of where that liquidity runs dry, and where price will look to slow down, so we can exit majority of our position. So yeah, hopefully that's a very valuable lesson for you. Now, why I mentioned about it taking the edge off is because we get another trade opportunity come through on the same pair, in the same direction, which then I did take a scalp on. All right, so I took a scalp in the same, and it's taken the edge off because I'm already in a trade. I don't really necessarily need to trade, but if the trade presents itself, I can look to take it. So at this point, as we can see, price has impulsed to the upside, breaking structure. So from this low, we made a new high, right? So let's just mark that out. This low made a new high. Now, let's just clear up some of the other price action here, just so we got a nice neat charts. We'll just zoom into this current price action here. Now, we can see we got a very clear POI here on the 15-minute. Notice just here. As we reduce this down though, so we go down to the 5-minute here, you can see a very clear 5-minute order block that price impulsed from. The original order block and original area that price impulsed from, taking the structure to the left, taking the liquidity to the left as well. And this was all in, I believe this is in, this is Asia still. So Asia then took the high of Asia, taking that liquidity, enticed the early buyers by, impulsing from this area. So a lot of people have been looking to buy from here. As you can see though, we have those relative lows just here. And we'll go to the 1 minute as well. You see those relative lows that were left here. And we'll go down to the 1 minute now. And you can see that just a bit more clearly there, where price did impulse from taking the Asia high. A lot of people again would have been enticed to buy from here, so we know there's liquidity sat below, but yet the original move started from this along to the left here, and this was the trade entry. As you can see, I've marked out the entry over here. I believe it was 3,120. You'll see from the screenshots again for this scalp that will be to the left or right of me, and we had a 3 pip stop. Now again, notice from the same lesson I mentioned earlier about giving the breathing room, as we can see here, a lot of breathing room given on either side, and luckily as well, because as you can see, the price just wicks below our order block in this case, and yet was able to stay in by roughly 0.4 of a pip, which is great. You know, it's very, very lucky, very fortunate for that play. Now, let's say if I did get stopped out for any reason, how would I feel? Yeah, I shouldn't feel any kind of way, because really it would have invalidated my particular plan. But I also wouldn't feel any kind of way because I have the longer term trade running, taking the edge off my day-to-day trading, the scalps, because I have the day trade, I have the potential swing trade running, giving me profit. Now, majority of partials taken and majority of volume taken at the high. As I said, the last structural high is the smartest play here. And there must have been some sort of news that came out to push price so aggressively to the upside there, and that risk to reward presenting, giving us a 1 to 5.4. Now I believe I actually took off the majority of the rest of the trade in this area, which, as you can imagine, could be slightly frustrating, because at the end of the day, price could have given us further, 1 to 18. Obviously, with majority of partials taken off, giving us extra 3 or 4%. At that area, but that's absolutely fine. Again, the edge is taken off because I've got the trade running that made sense to hold to the upside there. And yeah, so that was a great trade. Obviously, we went over 2 trades there. One obviously being a bit different than usual, obviously a day trade, potential swing trade, giving a much higher risk to reward, but showing you again the reasons as to why to enter, the confirmations. And if you notice from all the case studies we've done, they all go over the same thing: having a plan, having a discipline, being patient, letting the higher time frames, even with the scalps, give you the overall narrative and idea, and then the lower time frames just for your entry. Because even this trade here, the scalp that we went over just here, again, lower time frame just for the entry, but yet the trade idea came from the 15-minute, came from knowing that overall we're going to the upside already. So yep, be sure to drop a comment below with your thoughts and any trade ideas or even content ideas that you want us to go over, and I'll be sure to catch you on the next video, YouTube squad.